then you're going to think I'm right, even if the market ticks up 4, but then ticks down 5 or 6. You can see, obviously, in this case, price is going down. But if you believe it's going up, even though you give the 4 ticks down 5 or 6, you can see, quite obviously, price is moving down. But because you believe the market's moving up, your brain will edit out and hold on to the information that supports your view. Again, remember, you want to ask yourself, where can the market go, instead of where is the market going? This will help to open you up to what's actually happening on the chart. Now let's talk a little bit about market information. What is market information? Now it comes in trades, right? Bid, ask, volume, and the information really doesn't mean anything, right? It's neutral. It's not bad, good. It's not hurtful or pleasurable, even though we get pleasure on the winning trades, and sometimes we have we feel hurt on the losing trades, perhaps. But the information, the trades themselves, are neutral. The reason why we feel the pain is because of something that was coined by Mark Douglas in Trading in the Zone called information pain. And the reason why this pain can be so devastating, again, if you read Market Wizard, you'll have a very good idea about this. The reason why it can be devastating is because we don't have a way of quantifying it, like, ow, that really hurts, or qualifying it like, crap, I stubbed my toe. We've got no way to do that with the information. So, why is this important? Well, if the market every move becomes painful, then trading will become very emotional, and we'll be compelled to do things. We'll be fearful about doing things. Remember I talked about how if we're looking at making a trade and we've got this great trading lane, we're moving with the trend. The short-term trend is up, the long-term trend is up. In fact, the long-term trend is very aggressive, and we're looking to make our trade here. Well, if we're afraid, then we're very likely to miss out on the trade because we're going to be focused on the loss instead of focusing on the probability that we're going to make money. Remember, we talked about if we win 50% and we're making 2 to 1, that is going to equal profit. If we can stick to these numbers, well, right here is where traders start going wrong, and that's where these numbers start to go in the toilet because of emotionalism, compulsion, and fear. Now, why is that? Well, it's because the information starts to become associated with pain by our experience. Now, let me give you a very real example. When my son was 22 months old, he was attacked by a dog. Now, when I said that, you probably pictured a dog, like a Doberman or maybe a Rottweiler, a Great Dane, a Chihuahua, who knows. But you probably pictured a dog. I typically picture a Rottweiler. Now, fortunately, the dog really wasn't much bigger than a cat. It was my niece's cat, or my niece's dog. She picked it up on the street when she was moving out here from Texas to Arizona to stay with us for a while. But even though the animal wasn't that big, the experience was very traumatic to him. And now when he sees a dog, he will literally panic. He's getting much better, and Sarah and I are very gentle with him because we realize that it's a very real fear. To him, every dog is violent. Every dog means pain. Not just the big ones, not the small ones, not the barking ones. Every dog. And it's because he associates the intense physical and emotional experience that he had with all of the dogs. We are going to react the same way while we're trading. So you've got to get some of these right. In fact, you may even want to write these down on a sheet of paper and just figure out what some of these answers are. In fact, what you would ask is, instead of what are your beliefs about money, what are my beliefs about money? You would write that on the top of the page. What are my beliefs about success? What are my beliefs about fame? What are my beliefs about losses? If you don't think fame is important, just start making some money and people start noticing you have a new house, you have a new car,